We spoke to a bunch of fundamental experts, and all of them had to say that this rally is an oil and gas led rally, at least the trade yesterday, and they believed oil and gas would be meaningful participants in the next few days simply because of the government decision as well. How enthused are you by what the government has said about the subsidy sharing, and how big or how large a positive could it be for stocks in the upstream space? Can they actually continue the momentum that they have displayed yesterday?
I think what government has said is about phasing out of the subsidy, at least in the first year, that is in financial year 16. If you look back into the history of some of the other countries who have phased out the subsidies, I think they would tell you that I think it's a program which the governments of those countries would carry out in following years. Which means, suppose if you have to believe that I think this is the first year in which I think the government has so decided not to ask the oil companies to burn the subsidy burden, then in such situation, in subsequent years, I think the subsidy burden should be out of the way, and that could be a major re-rater for majority of the oil companies. We have seen, I think, a sort of a re-rating in refining companies, OMCs, given the fact that I think they were not asked to pay the subsidy, and on the other, they were not asked to, I think, bear the subsidy burden, and then on the other side, I think the upstream companies were struggling up till now. If this is so, that they are also being, I think, told not to pay subsidy henceforth, then I think the stocks would probably get re-rated. On the top of it, if one looks at, I think, companies like ONGC, where you have an average realization of around $45 to $50 per barrel, even when the oil prices, I think, remained about 75, 80 or $90 per barrel, then in such situation, when if the subsidy goes away, and if we have to assume that in financial 15-16 the average realization of oil, crude oil, I think in the international market is somewhere around, I think, $65, then in such situation, I think this year could see a huge amount of upside into the profit for the company. So now, because of this possibility, I think the re-rating is definitely due for this stock. At the same time, I think most of these stocks, I think, have remained the delight of short sellers in the market for long. And because of, I think, such positive news, I think the short sellers would first go and cover up their position. That's what I think we saw yesterday. I probably found, I think, some amount of delivery marking in case of Reliance, largely because of, I think, the positive news coming in the area of capex and the exploration in KG. So I think from that perspective, I think some amount of buying definitely is expected, re-rating definitely is expected, and do believe that I think if government stick to what they have said, probably I think investors would come back into the market, into this space with larger amount of confidence eventually.
Deven, strong commentary coming in from Cognizant. They've upped their FY15 guidance to at least 19%, a very bullish commentary coming in. They're saying they're bullish on demand, margins, as well as the digital business going forward, and healthcare segment too. While, you know, Cognizant we know is the outperformer of the IT basket, but do you sense there could be some rub off on our IT stocks as well back home? And more importantly, it gives you a vision into how, you know, IT as a sector and business is likely to perform from a year from now. What's your call then on the IT sector?
In fact, I think it's very important point. When we meet, I think our frontline IT companies, talk to the management, and I think start, I think, knowing, I think, what exactly is the likely business situation. I think one thing comes out very clearly, that most of these companies are basically changing their business model very systematically and significantly to get into the digital cloud computing space and the automation space that the customer is basically, I think, getting into. So to a greater extent, I think they are not worried about the business going forward either, and at the same time they believe that I think the conventional business model over a period of time, I think, would get transitioned into the new business model for sure. At the same time, many of these companies, and why many of these companies, I think these companies have, at least the frontline IT companies have a lot of cash in the balance sheet, so they are considering the target acquisitions in the Western world. Given the situation there and given the demand situation which is rising in the area of digital computing, I would think that I think they would be right place to get into the inorganic growth mode eventually. Maybe I think one of the famous line which comes out from the management of these companies, that I think the fear for the IT company is largely in the minds of analysts. As far as we are concerned, I think the business is, I think, remaining quite positive, and they see, I think, tractions going forward. So I tend to believe the argument, and at the same time not totally surprised if some of these companies end up giving the performance which is better than the target that they have set for themselves in the current financial year.
I'm going to move away from IT and talk about autos, and then it has to be Maruti. But my question on Maruti is that at 30 times based on FY16 estimates, is all the good news in the price? Is Maruti priced to perfection?
Yeah, Nikunj, I think always it is a challenge as to find which one would be the winner in this entire space, and certainly I think the premium traded companies are definitely giving us some amount of nervousness when we want to consider them a fresh buy. However, if one wants to look at the kind of a growth opportunity which is happening for I think most of these companies, including the passenger vehicle segments, I think it remains on a higher side. India is offering an opportunity for many of these companies to get into the higher league of volume. It's not going to happen in 1 year, it may not happen in 2 years, but I think the way in which the Road Mala project has been conceived by the government, to my mind, I think the higher amount of vehicle offtake is something which I think one can definitely look forward to in next 5 years time. Given that situation, the companies which are very strong in the marketplace, companies like Maruti for sure, with a higher amount of market share, they deserve I think a better amount of attention in this particular period. Though I totally agree that in the given valuations, I think how much further upside one could argue for, but I would certainly believe that in a good market, when the allocation of money increases, probably I think you might end up seeing 10 to 15% kind of an upside from a level at which I think the stock is right now quoting. I think it is distinctly possible. Whether it happens in 12 months or whether it would take more than 12 months, it's a subject of I think further amount of development in the market. But certainly I think I would think that any correction in the stock price I think would be an opportunity, given the kind of a market which is opening up for many of the passenger vehicle companies, and the Maruti remains within that I think at the front level.
Find us on Facebook at facebook.com/etnow, and don't forget to click the like button. You can also follow us on Twitter at etnowlive. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/user/etnow.